Hello, everybody, and welcome to my very first YouTube channel and video. Uh, my goal with these videos are to help and assist everybody become better in their personal finance lives. Uh, I've been married for about a year and a half to my beautiful wife. I have a CPA license, and I've gained extensive knowledge in Excel throughout my professional career, and I've used that knowledge and experience to help us keep track of our day to day income and expenses, and it's helped us tremendously reduce the amount of debt that we have. Right now, we currently just have our mortgage and student loans to finish paying off. So, what I would like to do is just kind of show everybody basically the setup of the spreadsheet that we use. Feel free to mimic this, but it's helped tremendously just being able to see everything that comes in and goes out. If you're not doing that, then you're falling way behind on your personal finances and being able to grow wealth. So on this first tab, we have our balance sheet, and I tried to mimic this as much as I could to almost like a small business. You have a balance sheet, income statement, and cash flows. On the balance sheet is the fundamental formula in accounting. You got your assets minus your liabilities equals your equity or net worth. And right now we have January 2020 completed. In the following videos and monthly videos, really, I'll be going over and actually walking through the process of how I go through and make sure everything's up to date. For the most part, everything is automated uh, in this worksheet. And as you can see, I have multiple tabs, but for the most part, everything is linked together to where I only have to enter our entries on this one tab right here. There's a couple other tabs that we have to manually enter some stuff, but for the most part, it's going to be this tab right here. So right now, you can see we have about total $16,000 in cash for the month of January. Bulk of that, unfortunately, is going to be going to federal taxes. We got married in 2018 in September, so really couldn't get a good grasp of what our taxes would be like for that year. And then in 2019, we just finished the whole calendar year. We filled the W-4s out. We thought we had filled them out correctly, and everything appears that we did, but we were severely, our federal taxes were severely withheld for our W-2 wages, and we owed roughly $4,000 to $5,000 more dollars than what we thought we were going to owe. My wife also teaches on the side. She does some teaching, and she gets paid a 1099. So we have to save or keep a portion of that. We take about 30% of it and just throw it into another savings account and make sure that we don't touch it so that we pay taxes when tax time comes around. We have a joint brokerage account, about 50,000 in there, so total assets is about 70,000. That's current assets. I split this up into current and long term. Long term is going to be more of our retirement accounts and HSAs. Also, I broke out our house, the cars that we own. I have a pretty decent card collection, some guns, generator, a safe, and an engagement ring. Obviously, I didn't try and capture every single asset that we own, just some of the bigger stuff to get a clear picture of what our true total assets are. So for January 2020, we're looking at about $500,000 in assets. About 300,000 of that is coming from our house. Liabilities, credit cards right now, we are paying these off monthly. We got about $1,200 in there for January of 2020. Our mortgage was about 225,000. So as you can see, we had about 67,000 in equity in our house. All I did was subtract house minus our mortgage. And student loans, we have about 125,000 left. We're trying to pay off roughly $6,000 to $7,000 a month right now to just eviscerate these loans and try to become debt free. Only thing left would be the mortgage. If you've been following along, you can probably sense that we are trying to stick with the Dave Ramsey plan. Obviously, we still have some credit cards. We are paying those off monthly. I would like to eventually get away from those, but as you can see, not 100% on this plan, but very close. We're sticking to a pretty tight budget, even though we do have a nice income combined. To be able to put away $6,000 to $7,000 a month right now into these student loans is it actually feels good because we have the end goal in sight and we can see the light at the end of the tunnel, even with this much right now. As you'll see in this video and more videos that come each month, you will see the progress. And yes, it's scary. Yes, we're putting $6,000 to $7,000 a month into this, but we know that when these are done, we have all that money coming to us. That is the goal. We want that money coming to us. And if anybody else is out there right now that has a lot of these student loans, I implore you, get on a written budget, see what your income is, see what your expenses are. The expenses are the big part because I would say a majority of people don't truly know exactly how much they're spending each month. And when you do see that, and if you're in a hole like we are with these student loans, it paints a picture and hopefully it lights a fire under you to get out of debt. So right now, our total liabilities for January of 2020 was about 350,000, and so assets minus your liabilities gets you to your equity or net worth. I broke it out by short term and long term. Long term is more of our retirement accounts, and I believe I have the house under there as well. Yeah, under the mortgage. Short term is our brokerage account and any cash that we have minus credit cards. So right now we're at about $160,000 net worth. What does that mean? Well, if we sold everything, if we sold our house, if we sold all of the remainder of our assets, got rid of all of our debt, we would be left with about $160,000. That's actually inflated because if we liquidated all of our 401ks, we would have to pay penalties and interest and taxes on these. So this 160 is actually probably a little bit less, but we have no intention of dipping into our 401ks until 59 and a half years old when we can take these out. We have majority is Roth 401ks, so and Roth IRAs. So every penny that we have right here will be ours. I suggest everybody do a Roth IRA. It's out of sight, out of mind. You can put $6,000 to a Roth IRA. You can also put $6,000 to a traditional. So it's the same amount each year. I get that you can get some tax savings right now with the traditional IRA, but are you really going to be that disciplined to truly save that tax savings right now in every single year up until retirement? That's what the difference would be. Majority of the people probably won't do that. It'll just especially if you don't keep track of all of your income and expenses, those will get lost in the weed, and you'll see those savings go by the wayside, either through a vacation or just frivolous spending. So on to our next tab, income statement. This is typically what you would see in your budget. I quickly have ours broken down over here. I spend most of my time on this tab. I bring in everything. I bring in our salary, or we're putting into HSA contributions, what our dividends are, how much we're contributing to our 401k. Even though we're not seeing this money right now, it's still income to us. It is going into a 401k account. And then all of our expenses. Obviously, the big one right now, student loans. We have no auto loans. We paid off our last car, Nissan Rogue, last year. So we have, and all that money is going to the student loans. We're doing the snowball effect. Next is our mortgage, about $1,500. Right now, that's actually a fairly low percentage from our salary. And as you can see, here is the rest of the makeup of our expenses. So $11,500 for January. We brought in about $14,000, which left us with a net income of about $2,500. Skip over the cash flows right now. Don't want to go into too much detail with it. Basically, it just shows the net effect of positive and negative, how much cash we brought in for the month. So January of 2020, our cash position went up just $100. And honestly, right now, since we're paying off so much debt, this one is going to be close or near zero as much as possible. We're saving up a little bit because we have a big tax bill coming due April. And to give you a better visualization of what our road has been like going back to January of 17, you will notice that we started with roughly non-mortgage liability of about $213,000. It was a struggle at first. It was tough to get on the same page. And it was definitely a huge learning curve for both me and my wife. As you can see, once we got on that same page, we have at a fairly consistent dip, almost to the point of the time where we got married. Right before, a month before, is when we really kicked it in gear and started reducing our debt. When you reduce your debt, you start to see your net worth climb, and that's really what you want to focus on. You want to see your net worth climb. As I said, January of 20 was about $160,000. So I hope you enjoyed this video. If it's your first time, look in the bottom right-hand corner, click on my link, subscribe, so that you'll get updated with every monthly video that I produce going forward. So thanks again. I hope everyone has a good evening, or if it's sometime where you're at right now, have a good day.